Hello, everybody. I'm James Beecham, co-founder and CEO of data security company ALTR, and welcome to another edition of Rabbit Hole Reviews, coming to you from the ALTR recording studio in Austin, Texas. Today's topic is probably everyone's favorite topic, which is cybersecurity insurance, or just insurance in general, I'm sure is everyone's favorite topic. I know for the people in Texas, where I was born and raised and where I live now, when the hailstorms come, the insurance claims typically don't get paid out on people's roofs. And turns out some things are similar inside of the cybersecurity industry, although it's a little bit different. Why did I go down a rabbit hole on cybersecurity insurance? Well, I'm still thinking about the Salesforce breach that's been in the news the past month or so. I did a previous episode around that particular breach if you want to go back in time and take a look at it. But the hackers that took the information from Salesforce are demanding their $1 billion payment, I believe, by today. And it made me think, who will cover that cost? Will it be Salesforce? Will it be their insurance? I was also thinking about some of the downstream implications that are going to come out of this with all the information that these hackers, were able to steal from the Salesforce company. And as other companies get phished and potentially hacked or data stolen or something, is Salesforce liable for all of that? So got me thinking about cybersecurity insurance and reading about it. Also, at the same time, we are currently releasing a new product around database activity monitoring and privileged access management. We've got a large prospect that we're in contract negotiation with now, and the topic of cybersecurity insurance has come up there. So it was a timely topic for me today. Wanted to kind of cover just what causes the need for some of these cybersecurity insurance policies, how they're typically structured, why most of them typically don't get paid out, and what you can do to kind of better prepare yourself for that. So, the name of the game in cybersecurity is patch management for vulnerabilities inside of applications, as well as training your employees to be mindful of potential cyber threats. We are on pace this year to have 47,000 vulnerabilities disclosed to the CVE program. I believe that's 1 in every 12 minutes, and those are just the ones that are being reported and discussed and talked about. So there's probably more out there. So the amount of vulnerabilities this year, I believe, will be the largest that have ever been recorded, and just another example as to why the risks associated with cyber and running software and hardware in the world is so dangerous. North America continues to be the largest target for breaches and for ransomware. I believe we're at 58% of the global targets for this. So one continent represents more than half of the attacks. But it makes sense if you think about the companies that are here and the operations that are here and the money and the data and things like that. My biggest takeaway from going into this rabbit hole was when I finally managed to climb myself out. It reminded me that your insurance policy is just a contract. That's it. That's all that matters. That's really all you need to understand, is that it's a contract. And you should be very aware of your contract. Some of the numbers and stats that I found were scary, and it makes me want to go dig in and review ours even more, which we're doing now actively. About 5,000 different executives were surveyed across North America. And one of the questions that was asked was, when you had an incident, whether it was a breach or ransomware, how many of you got paid back fully or were fully compensated for your policy? And it was about 1%. Said that they were able to recoup the money fully. Now, there's a number of reasons for that. I'll go into that in just a moment, but 1% is a low number when it comes to getting reimbursed or repaid for these issues. Insurance companies are having to deal with a whole host of new problems. I mentioned just a moment ago about the 47,000 vulnerabilities reported this year, but the AI systems that are out there now are both causing more breaches and ransomwares as the attackers use these systems, but as these systems are put out into place, I've covered a number of times before around how these AI systems are able to leak information and other things. So there's just a lot of risk out there. So insurance providers are really looking at their coverage and how they're writing their policies very closely. I found two main ways that the insurance companies approach policy underwriting, I think is the right term. I don't know, I should know that, but how they create these policies. For the smaller and more mid-sized businesses, companies like At Bay, insurance providers like At Bay, are taking a proactive approach. They're helping their customers by running more and more services for their customers, from email to chat to file hosting, file sharing, things like that, and kind of acting as a managed security service provider to help reduce the risk. And that makes sense, I think, as I thought about it and read about it more. And if you're kind of a small to a mid-sized business, At Bay might be a good one for you to go look at. I think we use them for a number of different things. So that particular insurance provider is proactive, and they like to work with their customers on making sure that their environments are safe and kept up to date and patched and everything. And then there are the larger providers like Chubb that operate in kind of more of a penalty-focused manner, where they will penalize companies via monetarily or by changing the limits of the policy dynamically as companies don't, for example, patch or update application critical vulnerabilities within a timely manner, or don't have certain cybersecurity practices within their business, or don't adhere to those cybersecurity practices. So proactive and penalty, usually it depends on the size of the business, which type of insurance company action you will get. So then I started digging into why these policies are not being paid out, and it really all comes down to a lack of understanding of what's in the contract. So again, I go back to, please go read that, please go understand that, please talk to your insurance provider. Number one reason why these policies are not getting paid out is the limits or the ceilings of the liability for the insurance provider was substantially breached or hit. Companies underestimated how much coverage they needed. They underestimated the cost associated with providing remedy for a breach, and therefore the clauses inside of these policies that stated, if the coverage or if the cost exceeds this amount, then we don't owe you anything at all. So that was the large. I think it was 65% of the 5,000 companies that did not get paid back. 65% of them reported that the cost exceeded their limits. And the second largest reason was that the costs were not covered, or they were outside the scope of their policy, whether that be providing credit monitoring software for your customers, or facing regulatory fines from countries that you didn't know you were subject to. Another example of not understanding your business, not understanding your coverage, not understanding your products and your customers and your liabilities. So please go look at that. The best way, I think, to prevent yourself from having an issue like this is to really stress the proper hygiene around patch management and vulnerabilities, as well as having good internal practices. Most of the policies that I looked at in the past couple of days did not cover insider threats. So if an inside employee causes harm or damage to your business, your policy typically will not cover that. So that's an example of understanding what is covered, what's not, and having all the right controls and processes in place for you to mitigate the risks that are not covered by your policy. An example, just to give around how hard it can be to deal with these policies, the Equifax breach from about a decade ago now. Their insurance provider forced them to focus on application vulnerabilities, highly rated application vulnerabilities for the applications that Equifax built, created, and run. The large breach ended up coming through a third-party piece of software from Adobe that was not patched and up to date. Equifax argued that the policy as it was written told them not to prioritize those particular updates and patches for the Adobe software, as the main policy was concerned with the applications that Equifax owned and created. There was back and forth. Equifax did not get fully covered for that claim. So again, just another example of needing to talk with your agent, talk with your insurance companies, and go through these scenarios and role play these things, and be willing to make changes within your business to adhere to your insurance policies. So hopefully you all enjoyed this riveting few minutes around cybersecurity insurance. It's just a contract. Anything that's in that contract that it's agreed to, you need to understand. Please go understand what's in these contracts and talk to your agents. Until next time, have a great day. Thank you.